everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment for July 14th. Well, the dollar is generally lower this afternoon against most currencies. The pound recovered ahead of today's crucial Bank of England meeting. As I expected, the Bank of England didn't cut rates this time around, but voted 8-1 to keep them steady until next month when, quote, most members expect monetary policy to be loosened, unquote, according to the minutes. Sterling shot up on the news, as one would expect. Now, the yen continued to weaken following helicopter Ben Bernanke's visit to Tokyo. There's talk that the Bank of Japan is considering his recommendation to implement what amounts to Argentinian or Zimbabwean monetary policy and just have the central bank finance the government directly. That would probably work. In Zimbabwe, for example, and inflation eventually hit 80 billion% a month. Speaking of inflation, the U.S. announces its producer price index this afternoon. The pace of month-on-month increases has been slowing recently, as you can see, and the trend's expected to continue. That could prove further negative for the dollar. There are 3 Fed presidents speaking this afternoon, but 2 of them, Esther George of Kansas City and Robert Kaplan of Dallas, have already spoken recently. The focus will therefore be on Atlanta Fed's President Dennis Lockhart. He's at the extreme hawkish end of the FOMC spectrum, but he also isn't a voter, so it's unclear how much importance the market will put on his words. Ms. George, the other uber hawk, already resumed her call for a rate hike on Monday, while Kaplan declined to speculate on the timing or number of rates, only saying that the Fed was making progress. Then, overnight, there will be several major data announcements from China, including industrial production, retail sales, fixed asset investment, and the crucial GDP figures. Putting aside the question of how accurate the data are, they're expected to show across-the-board slowing. Each one is forecast to be down slightly from the previous month, or quarter in the case of the GDP figures. That would corroborate the view from Wednesday's trade figures, China trade figures, which showed a continued slowdown in both imports and exports, with both showing a greater slowdown than in the previous month, and imports falling more than exports, I should mention. The trade figures, however, had surprisingly little impact on the Australian dollar, even though they were significantly worse than expected. That suggests to me that a slowdown in China is largely discounted already, and unless the figures are significantly different than expectations, there may not be much market reaction to the kind of gentle declines these data imply. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.